Upstart Holdings has been one of the most volatile stocks in the entire market. This company is using AI to facilitate consumer and personal loans. And when it came public in December of 2020, its stock increased 20x over the next year, only to give back 95% of that over the next 18 months. Now, transactions have been strong, lending has been very strong, yet the economy is on shaky soil right now. So what's in the cards for Upstart's future? Well, we addressed that on our most recent 7 Investing subscriber call, which we're making freely available here on YouTube. But if you'd like to see all of our research coverage on Upstart Holdings, you can see that at 7investing.com/UPST. Upstart, we don't need to go through a complete review, but we've touched on this a couple of times earlier in the year. I thought that their results for the first quarter were fantastic. I thought the results for the second quarter were fantastic. The stock is selling off because of concerns about the economy and the Upstart Macro Index, which is kind of a higher level review of the state of economy that the company self-publishes. It's a riskier macro, and they've recognized that. The Upstart Macro Index increased again to 1.6 in October. That just means that there's a 60% higher likelihood of loan defaults from people that are borrowing over their platform than there are from the long-term averages. It's a riskier macro right now. Upstart, for the most part, it wants to make good loans for its vendors, for the regional banks that are using it to initiate those loans, but it's not directly financially liable if those loans turn sour. It does keep a couple of R&D loans on its own books, but for the most part, this is banks that are holding the financial liability loan that's linked to those loans. And so it's interesting to see when you get some research out there that is actually making errors about the 30-day delinquencies that Upstart is going to experience, pushing down the stock price. And then it kind of comes back and retracts and says, actually, we made a mistake. Forget what we published out there that pushed the stock price down. It's actually half of what we thought it was going to be. I think Upstart's got unfairly punished by that. I also think that a Fed rate cut would be very good and encourage more lending in the economy. But then the bear counterpoint to that would be that consumer confidence is low right now, and there's a lot of macro uncertainty remains. But I'm keeping Upstart as a strong buy right now. I think it's undervalued. I still think that there's a lot of trepidation when it comes to investing in the stock because we saw the volatility in the years past, but I still really like this one. It's one of my highest conviction ideas right now.